best in radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to the Financial Survival Network. It's Kerry Lutz here. Date is October 17th, 2014. We've got John Manfreda of wallstreetformainstreet.com with us, talking about the usual precious metals and oil. John, welcome.
Thanks for having me.
Yeah, so been a pretty crazy week, and we made it to Friday, and the market has bounced back. And what do you think is going on here, John?
Well, in terms of the stock market, they talked about the ECB is now going to start buying, make asset purchases, quote unquote. So basically, printing money and flooding it into the market to keep stock prices up. And that doesn't surprise me because a couple of days ago, the Greek stock market was crashing and the bond market was crashing. And that will always have the financial powers that be worried when stocks and bonds start crashing at the same time. To them, that should be a big no-no. And it just goes to show that it's not just the U.S. that's addicted to cheap money, but it's the Fed. Or it looks like the rest of the world is addicted, where it's China, they have their stimulus program. Europe is now doing asset purchases plus negative interest rates. So this is a complete addiction to cheap money. So I think eventually over the next couple of months, you're probably going to see the U.S. Fed fire back with their own stimulus program. They already expressed concerns in their last minutes that they're very worried about a strong dollar, which they shouldn't be. But the reality is they're worried that a strong dollar will decline housing prices. A lot of these banks, housing is their assets. That's listed as an asset on their balance sheet, and that's comprised mostly of their assets. So the strong dollar would hurt the banks. It would help the U.S. consumer, but it would hurt the banks. So we're going to see, it looks like the currency war round 3, 4, whatever round it is just started. It started with China. Now it's Europe. And it looks like it's going to spill over to the U.S. in the next couple of months.
Yeah, I mean, the dollar got stronger than just about anybody could have predicted. 86 almost. And with QE in Europe, the Fed's going to have to do something about it, aren't they? Because otherwise, profits of the big U.S. multinationals are going to hit the skids.
Yeah, a lot of exporters are going to do that. And not only that, a strong U.S. dollar, that will hurt oil exports, which they're hoping to use as a profit for their energy companies. That would hurt them. So a lot of companies like Philip Morris is one, they sell in Europe. So Philip Morris would really get hurt by this.
Yeah.
So basically, they're going to keep, the Fed's going to have to fire back. It always happened. The last time they announced QE3, Europe announced their own stimulus plan shortly before that. And I think this is sort of similar. I think the in-between time is going to be a little bit longer than last time, but I think the same result will occur.
So you think we're going to have QE4?
Or 5. I don't know.
Whatever we're on, QE.
Yeah.
Whatever it is.
Yeah.
QE to infinity.
Yeah. More QE than Rocky movies. More QE than Star Wars.
Just about, yeah. It's unbelievable. So oil's going to go back up. Is that what we're looking at here?
Yeah, I think the oil market's definitely going to go up. I think we're close to the bottom. We saw some short covering yesterday. And not only that, the inventories. I think we're also near a bottom. This might be the bottom. I remember on 2012, when I first came on your show, I said there was a bottom in oil. And I think that bottom is going to hold. I don't think it's going to break. For the main reason, when prices get lower, demand increases. That's the first thing. Second thing, when demand increases, prices have to rise. Second thing is Venezuela just called an emergency meeting because these low oil prices will collapse their economy officially. It's almost on the verge of collapse, but they called an emergency meeting, and Iran's upset about it. And not only that, Saudi Arabia and Russia, they can't afford these oil prices. They've promised so many social programs, especially Saudi Arabia. They promised to prevent their own Arab Spring in 2011. They promised a huge amount of social programs, and it required, I would say, roughly $100 or more per barrel of oil on average to fund their social program. So I think Saudi Arabia is bluffing about low oil prices for 2 years. I don't think they're telling the truth. I think they're playing just good poker right now. I think they want the world to think they have a lot of cheap oil, but the reality is because of government, they also inject tons of seawater into Guar to keep it pumping. So their cost of oil are rising, and their government budgets are rising as well. And Russia needs high oil prices too to fund their programs. Social programs. So I don't see it. Shell producers, that's the one bright spot in the economy. So I do think this was a complete high-frequency trader takedown in financial warfare. I think it was done for a couple of reasons. Obviously, I think one was to punish Russia because they're dependent on government revenues.
Yeah.
That's what I think was happening. It's similar to the Cold War in the 80s, where they took down oil prices to bankrupt Russia. In the process, though, what people forget is this is a great documentary it's called Houston, We Have a Problem. It's all about insider oil companies. But what happened in the 80s is Saudi Arabia doubled or more than doubled their production in, I believe, 87 or 86. I forget the exact year. I haven't read about it in a year. But they doubled the production. It bankrupted the Soviets because their government revenue came from oil production.
Right.
And what happened was the unintended consequences is tons of U.S. companies went bankrupt because they couldn't produce at such a low price.
Yeah, sure. I remember that well. Yes, I remember that.
Yeah. So what I think right now, I think someone... I think the market realized that shale oil isn't as cheap as they say it is. Right now, a lot of people say it's 65. I think that's similar to like what miners, people on your show are probably familiar with miners' cash costs and all in. I believe 65 is probably their cash cost, not their all in. Their balance sheets don't look horrendously bad, but they don't look like they can afford $65 oil.
Yeah. Yep. No, I know what you're saying. And it's definitely, it's definitely putting a hurt on all of the drillers in the U.S. You've seen their stocks literally collapse overnight. And imagine if interest rates went up to boot. Not that I think that's going to happen, but one never knows about interest rates either, right? Remember what Einstein said about interest rates. He didn't get it either. So you never know about interest rates, right? That would be the 1-2 punch for the global economic system. So I don't, actually,
you brought up a good point about interest rates because a lot of these companies, they're not investing. And I'm just going to switch over to general equities real quick because you triggered a thought in my head. A lot of these companies, none of them are reinvesting in their businesses to improve revenues, increase profit margins. They're just accumulating more debt. They're buying back the shares of their stock, increasing earnings. And they could be doing this because I personally think these CEOs want to sell their stocks and dump them so they can get a big bonus and retire.
Yeah.
The thing is, though, they've accumulated a lot more debt. The CEO just probably sold a lot of stocks after big earnings period. So he doesn't care what happens to the business. If interest rates rise exponentially, all of a sudden these corporations, their earnings will collapse. The stock market will tank with it. And so the Fed and a lot of these CEOs know a lot of these U.S. multinationals can't afford higher interest rates.
Mm-hmm. Yeah, nobody can. The whole the state and local governments can't afford it. The U.S. government can't afford it. Nobody, the consumer can't. The homeowner can't. Nobody can afford higher interest rates. So I think every central bank in the world will be doing its goddamn best to assure that that there are no unforeseen rises in interest rates. Don't you think?
Yeah, I think so. I think that's why they're doing all sorts of currency swaps. I think that's why you see stimulus that started in China. You see it in Europe. The U.S., they're worried about a strong dollar. I think what they're also worried about is higher interest rates. And I think a strong dollar is only always leads to higher interest rates.
Mm-hmm.
Because you can only have a strong dollar with tighter monetary policy.
Yeah. So up next, talking about precious metals, where they're headed, gold, silver, platinum, palladium, all those good things on the Financial Survival Network.
FSN Radio. It's all about what's next.
Worried about the coming dollar collapse? Then you need to speak to Tom Cloud today about buying gold and silver. It's the key to protecting your wealth from a declining dollar. Call him now at 800-247-2812. Tom will help you find the exact right bullion products to keep you safe. Would you believe that Tom's been in the business for 38 years? Tom understands these markets better than just about anybody. He's seen bull markets and he's seen bear markets, and he's not worried, and you shouldn't be either. When it comes to uncertain times like these, there's only one place to turn, and that's gold and silver. And Tom's offering all FSN listeners free shipping and insurance. So call Tom now at 800-247-2812. That's 800-247-2812, or visit cloudhardassets.com and tell him Kerry sent you.
The Financial Survival Network. It's all about what's next.
Hey, if you just joined us, we're talking with John Manfreda, Wall Street for Main Street.com, and we're discussing now precious metals. We just talked about dollar and energy. And John, so have we put in the bottom on gold and silver, or is there more good news to come?
If you're a buyer, I think personally, I think gold will probably just base somewhere around that 1,200 range. I think the probability of breaking that 1181 low is very hard. I think there's just too much physical demand. You see India's imports increasing over 400% sometime year over year. I forget the exact numbers. I remember one of them was drastically huge. It blew my mind.
Mm-hmm.
And so I think they're back in the game now. China's buying. I think there's just too much demand for gold. I think platinum and palladium, when we passed sanctions on Russia, it's funny how all the Russian exports all of a sudden collapsed. You saw oil.
Oh, yeah.
So I think that was one of the reasons, as we just talked about. But I think the high-frequency traders are the boys, as Ed Steer likes to call them.
Yeah.
I think they went after platinum and palladium as a punishment to Russia, and it's created a great opportunity in palladium. Palladium's production costs are around $1,600 and $1,650. About 80% of the mines are uneconomical, yet platinum can stay at this price for what it's been like 2 years. It's unbelievable. This is not a so platinum. I keep getting.
Mm-hmm. I know. Yeah.
They are interchangeable, though, so especially in uses. But platinum, it's trading near 1-to-1 with gold, which is very unusual. Normally, it trades at a big premium. So if someone's a profit-seeking metals holder, meaning physical metals for profit, I see a great opportunity in platinum right now, especially since the American Eagles or some of those coins, they're not made every year. If they're profit-seeking, they'd probably be better served buying the bar the maples, which are made every year, and you have a lower premium over spot to pay. So if you wanted to pass something on to your kids, believe it or not, there are people that buy that to pass on to their kids the Platinum Eagle. They just stopped making those. So that might actually be a good family sort of gift giving. But in terms of platinum, I think we're almost near the bottom. I think palladium had a correction. I think the physical market's just too much. You see Russia stockpiling. Their mines are depleting. There's just not much palladium out there.
Right.
Out there. And silver, what I see, I'm not too sure. I think 16. I think worst case scenario 14. 14 wouldn't surprise me. But the thing is, silver's in a supply deficit now. And I mean an official supply deficit. It's for 2013, it entered deficit mode, so I don't see how much longer it can go. And the industrial demand's only going to increase, especially with the solar powers and a lot of solar plants coming up. Industrial demand for it's going to come up, and there's record-breaking coin sales, which I personally think is a big player. You see Eagles and Perth Mint silver coins record. I think it's just basically a big sovereign wealth fund or a big player. I don't think it's the U.S. retail investor buying.
Definitely not.
And that's actually a bullish sign for me that it's a big player, because if a big player is buying that much, it's because they know something, and the public hasn't been made aware yet.
I would think, yeah. I would definitely think so. So, yeah. And what do you think of the recent action in gold and silver, hitting those lows and then the bounce back that occurred?
Well, I think a lot of it's just physical demand from Asia that got the bounce back. The lows, I think the Fed is a great, call it propaganda, PR team, but they have a great one. Of course, they probably have the press bought off. But they're able to convince people through doctored up numbers from the government that there's a big recovery. And so right now, they've been able to convince Wall Street equities is the only game in town. In fact, I saw an article from Yahoo Finance. And generally speaking, when the stock market's, gold is generally an alternative asset. It's also negatively correlated with the stock market. When you convince people the stock market's the only game in town, alternative assets are going to take a little bit of a hit. And right now, they've been able to basically brainwash people into thinking unemployment is the only thing that matters. And you see strong official unemployment numbers, and I think that's what took down. They didn't want to look beyond the unemployment numbers, such as, quality of jobs, right, part-time jobs, labor participation rate. The labor participation rate's at an extreme low, lowest I believe since the 70s or 60s. I forget the exact one, but
since women entered the workforce, it's a record low.
Yeah, since women. So, if you like every government number out there, the devil's in the details. But they've been able to muster up sentiment to look at the headline and not the details. And the headlines, as long as they continue to look great, which I don't think that's going to last much longer. I don't think the headlines are going to look that great, because they need the excuse for more QE. Housing numbers were good today, officially good, but you saw pending home sales, existing home sales in the past. A lot of them, they've been iffy at best. 52-week lows on a lot of the new home builder stocks.
Yeah.
I think that's going to be the first sort of crack in the data. You're going to see more cracks. You see it almost everywhere. GDP, they had a negative one quarter. The next quarter is 4.6, but a lot of these companies, their revenues are not doing well. Google had a bad earnings period. And Google is generally a safe stock, speaking.
Yeah.
Apple was not happy with the iPad. And the other thing to show that this recovery is a complete lie is you look at China just surpassed GDP on the U.S. They're now the number one economy.
Right. Yes.
The reality is if China, which all you hear about in the press is it's slowing down. A couple of months ago, you heard about riots because of falling home prices.
Mm-hmm.
If China's in that bad of shape and the U.S. is in a vibrant, rigorous recovery, why is China passing the U.S. in GDP?
Good question. Good question. I'd like to know the answer to that.
So that's my take on it. And my answer would be is because the U.S. isn't in a recovery. And now I don't say I'm not claiming the headlines on China are wrong. I think they probably are in a slowdown and they should be due for another slowdown with all the bad loans in their system. But, the U.S. is not in a recovery, and that's why China's...
It never has been.
Yeah, absolutely.
Clearly never has been. Mm-hmm. That's the propaganda, right?
Yeah. Well, the Ayn Rand said you can ignore reality, but you can't ignore the consequences of ignoring reality, and they're going to learn... That quote will be learned the hard way, but it will be learned.
Yeah, and you can only ignore reality for so long till the consequences come home, right?
Yeah.
And we're going to find out about that soon enough, I think.
Yeah.
And,
yeah. I was going to say, in terms of precious metals, though, I think now's a great time to purchase. And if you can actually average your way in, if you're not bought out, meaning you've bought so much that you don't have any spare cash, now's a great time to keep adding. And I think oil positions, now's a great time to add, especially if you're looking for yield. I think adding yield positions in oil, oil and gas companies that have good yields, now's a great time to add. In terms of a trend setup, ones that don't have yield, but you buy for capital appreciation, now's a good time if you can hold on to them, but I'd rather go for the yield just because...
Get paid to wait.
Yeah, you get paid to wait, and it's so... markets are so manipulated. Things can take longer to play out, as we know, then.
Yep. So we find you, and you're writing where, John?
Well, we're on YouTube, Facebook, and we're on Twitter. So you just type in Wall Street for Main Street. Right. On Facebook or YouTube, you'll find us. So,
all right. And hey, you'll find it, as always, in the show notes to this interview on financialsurvivalnetwork.com. Don't forget, sign up for our free newsletter. Got one coming out shortly. And take a look at the site as well. We got articles covering the very things John and I discussed today and a whole lot more. Our webmaster, Stefan, is literally scouring the internet as we speak, looking for articles that you're just not going to find in the mainstream media. That's why thousands of people every month, start looking at the site, and you should too. John, as always, thanks. Talk to you soon.
Thank you for having me.
FSN Radio. It's all about what's next.
Every week the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.